I saw Sundar post it. I saw it in my feed. I ended up missing my next meeting because I had to figure out how long will it take for us to crack the encryption standards that we use for Bitcoin.
There are two types of people in this world. Those who are willing to hear new arguments, adapt as new data is presented, and change their thinking accordingly. And there are idiots, also known as Bitcoin maximalists. This video is for the former. Now let's talk about the existential threat facing Bitcoin, and that's Q-Day. Q-Day is when quantum computers become powerful and stable enough to break the current encryption standards of the internet. Oh god, I can already hear the comments. But Dave, most internet protocols use RSA 2048, whereas Bitcoin uses SHA-256. Yes, we'll get to that. But I first want to say I'm going to approach this video from a quantum hack perspective, not a chain dominance perspective. Chain dominance is a very real threat for any miner who gets access to a quantum computer, but I'm going to skip it in this video. If there's a desire for me to make one on it, I can absolutely do that. But for simplicity's sake, let's just stick to quantum hacking. Anyway, yes, fair point, SHA-256 is pretty hard to break. But here's the thing. I think that companies and governments will have the opportunity to apply post-quantum cryptography so that the whole internet does not break. I mean, Apple's already introduced it to iMessage. These websites and institutions will be able to respond relatively quickly, and they have the added benefit of having some sort of obfuscation between server and client. So they have more defense tactics available to them, whereas Bitcoin is a sitting duck. Unless Bitcoin is willing to fundamentally change what it stands for, Bitcoin is either facing an existential threat or an existential crisis. It depends on which way you want to look at it. But this isn't being talked about enough among Bitcoin communities, and that's a problem, and that's why I don't trust them. Remember, Bitcoin by nature is decentralized and open source. It's one of the things that makes the technology really cool. So there are two scenarios that will happen logically. We're going to ignore how long it will be until Q-Day, because the fact of the matter is, no one knows. But Google has recently announced Willow, which gets us within spitting distance of being able to break most cryptography on the open internet. Who knows what they have behind the shelf or what governments are working on. So, ignoring for time, there are two scenarios that will logically happen. And these aren't time dependent. This will happen either way. Bitcoin will either adopt post-quantum cryptography before Q-Day, or they'll adopt it after Q-Day. We'll explore both situations. Let's start with after, because it's easier to answer. And that answer is pretty simple, but I'll let the popular YouTuber Andre Geek, who is very bullish on Bitcoin, answer this.
But I do think that it's plausible to assume that Bitcoin could be the first attacked. Because if a company has a powerful enough quantum computer, it wouldn't want to attack a bank or a country. That's kind of illegal. But a cryptocurrency that nobody owns just to prove a technological point, it's plausible. I don't think we should ignore that the potential is there. And this is something that I've thought about since I got into Bitcoin, because quantum computing is not an if problem. It's a when problem. It will happen. And when it does, Jim Cramer will be selling out for the 10th time. Bitcoin's price will probably crash. It'll scare most people out of it.
It was a scam.
It was a bubble all along. Now, I don't know when this will happen, and I don't know how bad it's gonna get, but I do know that even if it does happen, in the long term, Bitcoin will still be safe.
He goes on to say that Bitcoin will be safe because it will hard fork. We'll cover that in a moment, but yeah, he's right. But the details that he was conveniently light on was that this just wouldn't be another crypto winner. This break of trust would be like a 90 to 99% drop in Bitcoin's price. I'm not sure if it can come back from that. But Andre makes the point that it would come back to people who truly understood Bitcoin. They'd hodl through it, and yeah, maybe. I'll actually buy that, sure. But the end result would still be the same. Bitcoin would have to adopt post-quantum proofing, which leads us right into the next scenario, pre-Q-Day quantum proofing. But yeah, there are also some problems here.
Back to the reason why everyone in crypto is freaking out about quantum computing. In short, they're aware of the fact that a substantial amount of crypto on major blockchains has been lost or is otherwise inaccessible. It will not be possible to quantum-proof the wallets that hold this crypto. And Bitcoin is the elephant in the room here. It's believed that as much as 3.8 million BTC has been lost or is otherwise inaccessible. That's almost 20% of BTC's circulating supply and 18% of BTC's total supply. So, how will you get the wallets holding all this BTC to send it to quantum-proofed ones? Well, I'll start by saying that this risk technically applies to older Bitcoin wallets which sent a BTC transaction using the P2PK format, which would permanently expose the private key. So I ask again, how will you get the vulnerable Bitcoin wallets holding lost BTC to send it to quantum-proofed wallets? Well, you can't. This means that millions of BTC could be stolen by a quantum computer in the future and sold on the open market, crashing Bitcoin's price. In fact, you could argue that this is inevitable. It's not a question of if, just when. This could be prevented, but it would risk the destruction of Bitcoin and all it stands for. And this is where things get really interesting. The only way to prevent the inevitable theft of lost BTC by a quantum computer would be to do a hard fork of some kind.
Now, a Bitcoin hard fork is what happens when the Bitcoin community votes to split into two versions, an old one and a new one. The team at Coin Bureau, who played that last video, actually did a great job of covering this, so instead of recreating it, I'll play what they think would happen.
The most likely Bitcoin hard fork in this context would involve upgrading Bitcoin to a quantum-proof standard at a fundamental level. In practical terms, this would involve creating two versions of Bitcoin, one version that's quantum resistant and another version that's not. This is the most likely hard fork in this context, as it would be the easiest to manage. However, it's possible that Bitcoin could fork in a different way. You see, to the untrained eye, there are two very straightforward solutions to the lost BTC problem. You can either reclaim this lost BTC and add it to future Bitcoin mining rewards, or something similar, or you could just delete this lost BTC from the supply. But besides practical problems like accidentally reclaiming or deleting BTC that wasn't actually lost, it would create an insurmountable philosophical problem.
And the core of that insurmountable philosophical problem that would be presented in that situation is that the Bitcoin community would be affecting the supply of Bitcoin. And that's a big deal. The key promise of Bitcoin was scarcity. And that your Bitcoin were your Bitcoin and no one, no institution or other Bitcoiners could take them from you. So there is no way in which you can have your cake and eat it too here. Bitcoin would be able to hard fork to become quantum resistant. That's great, but it also would have to fundamentally change its original core promise of scarcity and 21 million Bitcoins and all that stuff. And that's a big problem that no one is talking about. And the other giant problem that presents is that if those old Bitcoin are modified or deleted, that means that the existing players would have a bigger share of the total amount of Bitcoin. As of today, BlackRock owns almost 6% of all Bitcoins outstanding. MicroStrategy almost owns 2% of all Bitcoins outstanding. Now, in BlackRock's case, they're just opening it up for an ETF so other people can invest into it through the public markets, which is great. I'm in favor of ETFs on this channel. But they have come out and said that they own the voting rights for those keys and those coins. That's a big deal. There are also two other problems right out of the box that weren't addressed in any clip that I found. A big problem with Bitcoin is the speed at which it settles. A post-quantum encryption framework would most likely already increase the time that it takes for Bitcoin to settle. It's already around 10 minutes depending on how many transactions it's settling. And then the second problem is how much more electricity would it consume? The Bitcoin network already consumes the electricity consumption of frickin' Poland. If it had to adapt a more advanced security protocol, it's probably going to be more expensive. It's probably going to be heavier and consume more electricity and take longer to settle. Those are two very real problems with Bitcoin. So in sum, those are my major beefs with Bitcoin and quantum computers. Now, there is some light amongst this. The incoming Trump administration is vowing to create a strategic Bitcoin reserve. That would change the game. Because just like when Andre said that a bank or a country wouldn't get attacked because it's illegal, well, it's actually not illegal. If it's a country that's getting attacked, it's an act of war. So if the US is staking and saying, hey, we're going to own Bitcoin and we're going to protect Bitcoin, then you can quickly see how that could become an act of war. So there would be geopolitical protections for Bitcoin. That is kind of the only saving grace that I could think through here. But my problem in that scenario is that Bitcoin is getting further and further away from its original dream. I've read the original white paper from Satoshi. I read it years ago, like 2015, 14. And the opening sentence of that white paper is that Bitcoin is a purely peer-to-peer version of electronic cash. While the dream of having it used as electronic cash has already gone dead and to the wayside, I mean, with its lack of par price settlement, it will never be used as a currency. So that was the dream of means of exchange. So now Bitcoin maxis are saying that it's only going to be a store of value, at least until Bitcoins are done being minted or whatever dream scenario they want to come up with. So even the first sentence of Satoshi's white paper is gone. And then he talks about how it would need to have a lack of institution. But now the Bitcoin community is trying to get the government involved and the government to protect Bitcoin. And then again, BlackRock owns 6% of it. It's getting further and further away from its initial dream. And I'm sure that this comment section is going to be a war zone. And here's why. Bitcoiners need to have other people want to buy other Bitcoin. When the only value proposition you have for something is that you'll be able to sell it later at a higher price, that's a bad sign. St. Thomas Aquinas wrote, "Beware the man of one book." And when you have a group of people, Bitcoin maxis, whom I'm going to continue to shit on this channel, the reason why they push so hard and they are so intolerant to any sort of bearish sentiment or any other conversation other than Bitcoin must go up is because they are purely dependent on convincing you to buy Bitcoin so that it will continue to go up. And when your business model relies on the greater fool theory, well, there's a term for that. And that's a Ponzi scheme. I think this will be the last video I make on Bitcoin for a while. I'm really interested in investing in productive assets. A productive asset is something that has yield. It has something like a company has earnings. What's really great about a productive asset is that you're able to value off of that. It's really, really hard to value a non-productive asset, which leads to speculation. Here's Buffett once again on Bitcoin.
When you buy a farm, you look at the crop every year and what prices are, and you decide whether it was a satisfactory investment. I mean, you look to the asset itself and what it produces for you. When we buy a business, we look at what the business earns and decide how we feel about it in terms of what we paid. But we are buying something that at the end of the period, we not only have what we bought in the first place, but we have something that the asset produced. And when you buy non-productive assets, all you're counting on is whether the next person is going to pay you more because they're even more excited about another next person coming along. But the asset itself is creating nothing.
If you want to learn how to value a company exactly the way Warren Buffett does, then come check out flankinvesting.com. We've released a course that will walk you through step by step on exactly how to do it. We also have a data and a social platform that are built to help you keep that long-term perspective on the company. We think it's pretty cool. We're still in the early stages of what we ultimately want to build, but your early support would really mean a lot. There'll be more information on Flank Investing on the description below. And if you're not quite ready to join that platform, there'll also be a link to our free Discord in the description. So I hope to see you there. Thanks again so much for watching, and we'll see you next time.